All right, we are joined by Prashant Kumar, who is the Managing Director and CEO at Yes Bank. Mr. Kumar, always a pleasure to welcome you on NDTV Profit. Of course, a strong set of numbers coming in for this particular quarter, but I want to focus on a few of the aspects which have improved or at least optically improved the performance of the company in the last quarter gone by, which have been one-offs or non-recurring in nature as well. And that's where the operational aspects also kick in. So my first question to you, Mr. Kumar, is on the loan growth. Now, for the last quarter, it has been at 5% growth. Now, if we are not wrong, there has been guidance given by the bank of 8% to 10% growth in this particular financial year. With the 5% loan growth in the last quarter, has anything changed on the growth outlook? And what will be your guidance for FY26 and 27 on loan growth?
So I think we are quite confident to achieve 8% loan growth for the current financial year. And why I'm saying this, because if you see last quarter-on-quarter growth is 2.9%. So if we grow in the same range, which is around 3%, our YOY loan growth would be around 8%. Okay. So basically nothing has changed, but we are following a very strategy in terms of chasing a profitable loan growth. Sometimes you may go for just loan growth, which may not give you the margins, because there are certain asset classes where the margins are very thin, very competitive. And on top of it, then you have the PSL obligation. So I think it makes sense that you chase those asset classes, which not only gives you good margins, but also in terms of not unnecessarily bring the obligation on the priority sector requirements.
All right, so 8% is what you're guiding for this financial year. But Prashant Kumar, you also reported an expansion when it comes to the NIMs. Now, there were a few events like CRR rate cut, deposit repricing, which also impacted, which are one-offs. And also we know that the rate cut is going to show much more impact from Q4. So putting all this into perspective, what are the NIMs headed for going forward?
So I think there has been an expansion of 10 basis point on NIMs for the third quarter. The current quarter, the 25 basis point cut in repo, definitely the entire loan book would be repriced in the 3 months. Okay. Though there would be advantage because of the CRR cut also. But I think in this quarter, for the entire banking industry, if we are able to protect our NIMs, I think that itself would be quite challenging. Because the reason is that Q4, there is always a good loan growth. And because of the tight liquidity situation, I think there is a very close fight between all the banks to get the deposit. You have seen like the loan to deposit ratio of the banking industry for the first time has crossed 81%. And some of the banks are actually 90% plus. So I think in that situation, definitely those banks would be fighting very hard to get the deposit to support their loan growth. So I think Q4, there would be definitely a very close fight for the deposit. Everybody would try to get maximum deposit. Would not be possible to further reduce the rate of interest on the deposit, at least in the current quarter. So our strategy is definitely in terms of protecting the margins in the Q4. But definitely going forward, there would be an upward journey or journey in terms of improvement